of another fantastic company right here for you. We have the CEO of Agrify, Raymond Chang, NASDAQ-listed AGFY, moderated by Aaron Gray, CFA, CPA, Managing Director of Equity Research, Consumer and Cannabis at A.G.P. Give them a warm round of applause to the stage, everybody. Thank you so much.
Thank you, everyone, for joining us today. I have the pleasure of moderating this panel with Raymond Chang, CEO of Agrify. My name is Aaron Gray, senior analyst covering cannabis at A.G.P. Before we get started, I just want to disclose that I do have a buy rating and I cover Agrify, and they've also been a client of our investment banking services over at A.G.P. So, Raymond, thank you for joining me here today. So we want to talk about disruption within cannabis and cultivation. So to kick things off, I would love for you to just give an overview for the audience about Agrify and how you're looking to disrupt how cannabis is cultivated in the space.
Sure. I'm sure many of you guys have been to a lot of these cultivation facilities, right? And typically what you see is a room like this size, and it's probably like a one-tier light bench style grow. But the reality is that where I'm sitting and where you guys are sitting probably has a completely different temperature, humidity, light penetration, right? So it's almost impossible to really kind of provide the ideal grow environment for the plants. And our solution is that we basically provide these micro grow chambers so that you can actually deliver the best grow environment to the plants at all times. And the result of that is much higher consistency, repeatability, and quality. In addition to that, you see the ceiling, right, allows you to go vertical. So our solution, the micro grow chamber, you can actually also stack it up. So instead of basically just having one tier of grow with the lights hung from the ceiling, you have a situation where this room is actually packed with our vertical farming units. And each one of those vertical farming units is capturing more than 1.5 million data sets on an annual basis, right? And as a result, again, much higher quality, much higher yield, better ROI for your facility at a much lower cost. So that's really our secret sauce. But in addition to that, we have also gone into the extraction space as well, which I'm happy to elaborate a little bit more later.
No. Absolutely. Thank you for that overview. Let's stick to the VFUs and we'll get into extraction in a little bit. But for the vertical farm units, you talked about, some of the things you're solving with cannabis. Can you dive a little bit deeper in terms of, the economics, right? So you're going to a current grower. They've seen the legacy operations of their indoor or greenhouse. So can you talk about maybe the economics, how you're showing them, how you're making it more CPG-like and automated, and how you grow cannabis, and how you're showing to where they should go with the VFUs of Agrify versus their legacy way of growing?
Yeah, so let's assume that you have a facility, call it 30,000 square feet facility, right? Using our solution, it might actually cost you a little bit more, 1.8x of CapEx upfront, but it actually gives you more than 6x the returns, right? And in addition to that, it's basically the repeatability, the consistency, and also allow you to have the lowest operational costs. So for example, right now in the industry, we're talking about somewhere around $450 to $500 per pound. Using our solution, it's probably somewhere around $300. In addition to that, because of the vertical extension, you could have as much as 6 times the yield coming out of that same facility. So think about it. The same 30,000 square feet facility that I talked about, if you do it the traditional way, maybe you'll have 18,000 square feet of canopy. By using our solution, you could actually have as many as 45,000 square feet of canopy. So much higher yield, much lower cost, but most importantly is the consistency and quality that we deliver.
Okay, absolutely. So when you talk about the infrastructure needed within the building, right? So could you go into a legacy indoor where they need to change things? And you just had an announcement this morning on the rapid development pack. So you talk about what things would have been done before to kind of bring in the VFUs and the infrastructure, and how that announcement this morning with the RPDs changes that?
Sure. There's been a lot of interest in our solutions. but I know it's also difficult to convince an existing operator to basically have to rip out everything and renovate the building and etc. So we actually launched what we call an RPD program this morning. And this program allows you to basically take essentially 10 or 20 of our vertical farming units, right? And it's essentially a plug and play situation. So 10 to 20 units, all you need to do is basically have electricity and water, but everything else is basically comes with the package. So literally, it's like a skip program that we can actually roll it into any facility, plug and play, and you can actually get started right away, right? So think about it, the time to market, the advantage of that, right? And also being able to basically bring your facility to the next level with very minimal disruption.
No, absolutely. Sounds like it's a lot less investment now for some of these operators. And going into some of the bigger operators, you've announced an R&D program with Curaleaf, so where they have to make that investment. It sounds like this program can really help to where less is needed, and potentially you can get more of those initial trials and R&D programs with the bigger operators, so we can tell them like, hey, you don't need to turn out a whole facility. Here's a couple of VFUs, and then if you like it, you can go in much deeper. So how do you expect for this RPD program to help bring on more MSOs and bigger operators into the Agrify platform?
Yeah, I mean, we have been really just, like you said, listening to our customers, right? So actually, there's been a lot of MSO engagements, but one of the biggest challenge for us is they don't want to have any disruption to their existing facilities, right? I mean, think about it. Like if you have to take down everything, you have to renovate the building, you introduce biosecurity risk and all that stuff. So we actually have been working on the SKIP program for the last, call it 6-8 months. And the new RPD program will allow us to literally have the whole package to deliver to a facility, right? Without having to go through that, hassle, right? So they can actually start right away. And again, it's the time to market and basically the hassle-free approach that allows you to basically get everything started right away.
Okay, fantastic. So let's talk about last year. You introduced the total turnkey solution that allows Agrify to provide financing and help with smaller, mid-sized operators to get access to the VFUs while also providing Agrify with long-term performance-based fees as well as SaaS fees. So can you talk about the total turnkey solution, what brought you to develop that program, and how it will benefit Agrify as well as the operators you partner with over time?
Yeah, I mean, I think all of us know capital, lack of availability of capital continues to kind of hold back the industry, right? I mean, we all hope that the Safe Banking Act will get passed and et cetera. So we decided to launch what we call a total turnkey solution last year. The total turnkey solution basically allows us to work with selective qualified customers, whereby we actually invest upfront. We provide them with construction loans. We actually fit out the entire facility for them. And in return, this is a 10-year partnership program, and we actually get paid by the pound. So we charge roughly about $600 per pound. And on top of that, we charge SaaS fees. But the benefit of that is we're not taking any equity out of your business. And on top of it, you don't have to go out and raise expensive capital, especially in time like this, right? And so it's actually a great program. Right now, we have partnership in Massachusetts. We have a deal here in Florida, and we just launched another deal in New Jersey. And we're basically looking to do a lot more of these TTK programs, which I think is mutually beneficial, and will also give our shareholders a lot of long-term value creation.
Yeah, exactly. So total turnkey solutions has been a hot topic for Agrify when we speak to investors. Still in its very early days. You've done some contracts. Right now, the revenues coming in are more construction, build out. When can we expect to see more of those reoccurring revenues of the SaaS fees and performance-based fees to start coming for Agrify?
Yeah, so we have 3 what we call the legacy customers that we converted them to a quasi-TTK model. And those 3 customers will actually come online this quarter. And beginning to basically start to be able to cultivate. So we can expect to see some of the recurring revenues to really kind of kick in quarter 3, and then obviously quarter 4. And then on top of that, we're also bringing our full TTK program, the Button Marys up in Massachusetts. We're expecting to complete that by the end of this year, before the end of this year. So really 2023 is when we will start to see a lot of that recurring revenues kicking into our revenue streams. And another important to kind of keep in mind is that those recurring revenue is very high margin, and it's basically almost like 100% flow through to the bottom line, right? So it's actually something that would be very exciting to see.
Yeah, no, absolutely. And when you talk to bookings, right, fourth quarter alone, you had $250 million in bookings, right? That's phenomenal. When you look at the increase in what you're expecting initially after your 3Q. So can you talk about, those bookings, and when you look at the TTKs, how you're thinking about versus construction and reoccurring, and the timeline of when those will come to fruition?
Yeah, so when we actually do our booking numbers, even though a lot of these TTK partnerships is actually for 10 years, the booking number is actually the first 3-year value of that partnership. So what's included in that is basically the construction aspect and also the 2 years of expected revenue streams that we can expect from these TTK partnerships. So yeah, I mean, it's very exciting that we got more than $250 million of bookings just in quarter 4, and even though there's been a kind of a slowdown in the industry, people are saying that they're seeing construction delay and build out delays and etc. But we're not seeing that actually at Agrify. I think the momentum continues to remain super strong. In fact, we're being actually very selective as to who we actually partner, and we continue to basically we want to get into some of these more limited license states where the wholesale value is still actually holding up very nicely. Some of the new states like New York, New Jersey, for example, Ohio is another interesting state that we're looking at. Like in Ohio, I think we have a huge advantage because in Ohio, they only count the actual floor square footage. So being able to go up vertical, right? In fact, using our solution, you can have as many as 6 times the amount of canopy spaces, right? So that's a huge advantage that we have for places like Ohio. So we're going to basically remain very active in this space and, basically hope to announce more TTK deals.
Yeah, absolutely. So you talked about you guys still seeing high demand. Can you talk about the incoming calls you're seeing coming in? Who are some of these, potential partners? Are they smaller operators, mid-sized operators, some of the bigger MSOs that we talked about, all down the line? Who are these incoming calls coming in with the demand? And number 2, how do you then parse out which one will be the right partner for Agrify?
Yeah, so honestly, I didn't expect the TTK program to really kind of take off that quickly, right? We thought we were going to only work with like the smaller single state operator, 30, 40,000 square feet. But what I'm actually seeing now is even the bigger players, some of the, what I call tier 2, tier 3 MSOs are actually very interested in our solutions. Like, for example, our partner here in Florida, Go Leaf, they're actually, a small MSO. They have operations in Maryland and then also down here in Florida. So we're actually now being approached not only by the smaller guys, but also by some of the what I call tier 2 MSOs for partnerships. And again, I think it's also the state, pretty much geographic dependent. So like here in Florida, it's basically vertical license, right? So you need to work with the big player, right? Otherwise, you're not going to be able to compete because you pretty much have to handle everything on your own. But in places like Massachusetts, you actually capped at 100,000 square feet, right? So in order to actually get market penetration, I might need 3 or 4 partners, right? In places like Ohio, given our height advantage, maybe we don't need that many, right? So again, we have to look at it geographic by geographic and basically choose and select the best partners accordingly. So every state is going to have different strategy, but we pretty much have, first of all, we're not going to go into like places like California where you actually see a price depression. We're basically going to focus on limited license states where the wholesale value is still holding up very nicely, and those are the areas that we focus on.
All right, no, absolutely, and that makes sense given with your units, you try to cater more to the premium. But want to transition a little bit. We're talking about cultivation and VFUs. You've also started shifting over to extraction. The past 6 months or so, you've made 4 acquisitions, right? Precision, Cascade, peer pressure in the lab society. So now you have about $60 million, I believe, run rate for extraction. So talk about the reason for why Agrify wanted to make the shift, and add on extraction to the existing cultivation footprint for you guys.
I mean, the truth of the matter is, consumer preferences, we're seeing a shift of that, right? You go into a dispensary now, you see a large variety of products on the shelf, right? I would say that, concentrates could take up as much as 50% of the total, product offerings, right? For many states. So constant extraction obviously is a central piece of all that. And that's the reason why we got into it. In the last 6 months, we made 4 acquisitions. These 4 acquisitions allow us to actually be the #1 player in the extraction space. It's a $60+ million business, and we can cover all types of extraction, going from hydrocarbon to solventless distillation, isolation. So basically, we have a variety of offerings, and we can offer a total turnkey solution to any operators that are interested in basically going into the extraction space.
And when you talk to a lot of people in the industry, those acquisitions have been some of the leaders. If I'm going through cultivation sites at the extraction part, I'm seeing the precision machines, I'm seeing the pure pressure machines. So can you talk about just some of the synergies you have, especially at the top line, the customer base, and how that's really been an added value to the Agrify team?
Yeah, I mean, it's pretty amazing. When we actually add up the total number of customers for my 4, extraction companies, we have like more than 7,000 active customers. 7,000, right? And the synergies, it's tremendous. We just had our, quarter business review, QBR, last week, and we're now seeing basically the cultivation team working with our extraction team and basically attacking from different angles, right? So you could actually go to an existing operator and say, look, we're seeing problems with your extraction products. Everything starts out with better quality biomass. So you might actually want to consider Agrify's VFU, because the Agrify VFUs will allow you to have better biomass, right? And same thing on the cultivation side, we're basically telling them, hey, just selling dry flowers alone is not enough. You really have to basically have the ability to offer varieties of products, right? So there's been actually tremendous synergies now between cultivation and extraction. And I'm very confident that we're probably going to be announcing something very shortly that basically ties it all together, right? So very excited about that.
No, absolutely. And looking forward to hear about that. And that ties right into my next question. So Raymond, something we've talked a lot about is the fact that data, the underlying data for Agrify is really something that's sometimes underappreciated, by the investor and broader community. So can you talk about some of the data that you're collecting, how you're able to then leverage that data, and how bringing in extraction along with cultivation only creates a bigger data set for you guys to pull from?
Yeah, again, let's just use this room as an example, right? A traditional setup, basically you probably have 5.5 turns, right? And sometimes even less. So you get 5 sets of data points, right? That's it. This exact same room, if we actually put our VFU equipments in here, I would estimate I can probably put about 180 to 200 of our units in here. And every single one of them could be running a different grow recipe. Combining that with 1.5 million data sets that we're collecting, think about how much knowledge we're gaining on our competitors. So for example, I can tell you, growing the same strain for dry flowers is very different for extraction. And if you want to push for CBN versus pushing for THC, again, it's a completely different grow recipe. Right? And we have all that data. One of our customers did an example, right? So basically our VFU, the maximum number of plants you can put in there is 64 plants. So his idea was that, okay, for every VFU, for every strain, I'm going to basically just put 64 plants. We showed him that actually for some of the strains, he would actually be better off at 58. But if you're actually pushing for THC, you might actually want to even lower it down to 56. And actually, the number of days to get to flowering is 74 versus 75. For example, you want to grow purple punch, you might want to intensify the light spectrum, the red light spectrum, right, on day 57, because the red light spectrum is what gives that nice purple color at the end, right? So you're going to be able to dial it in on a strain by strain basis. And on top of that is the repeatability, because once you actually figure out the best grow recipe, you don't want to touch it. So we have a monitoring capability. So our units, most of the time, the curtains are down. We don't want you to even open it up. Everything just runs automatic, right? The only time the curtains are up is actually there's a plant touching activity that's required. And the result of that, better consistency, better repeatability, and better ROI for any of the operators.
All right, so controlled environment, data, consistency, bringing CPG to the cannabis category.
Yeah.
Thank you very much, Raymond. Last one for me. Looking forward to 2022. How can the investors in the audience and the crowd, what can they look forward to seeing from Agrify?
Yeah, I mean, we're projecting to do about 140 to 142 million this year. And we remain very excited that we're going to be able to achieve these numbers, and strong momentum, and look forward to a great 2022.
Fantastic, and we look forward to seeing it. Raymond Chang, CEO of Agrify, ticker AGFY, trading on the NASDAQ.
Thank you.